I'm joined today by Menna, partner with Goodwin Procter, who specializes in REIT transactions. How concerned should the industry be about looming debt maturities?
The real estate industry should be very concerned about looming debt maturities. I think that the REIT industry has stabilized, and the concern about the debt maturities on the balance sheets of existing public REITs have become abated to some extent with the amount of equity that has been raised. But the industry as a whole should certainly be concerned about the amount of debt that's maturing, and particularly the debt that was put in place between 2005 and 2007.
And what steps do you think need to be taken to create a fully functioning CMBS market? And is this really that important to the industry?
I think a fully functioning CMBS market is crucial to the long-term health of the real estate industry. I would say that the number one ingredient would be a finance company or a bank or investment bank that was willing to hold a B piece or junior tranche on its balance sheet. Now the CMBS offerings that were done, one was TALF financed or TALF eligible with DDR, and the other with Inland. They don't necessarily need to be relying on obviously the federal support any longer. And in fact, the B pieces were not held on the balance sheet of the sponsor of those securitizations. But I do think that over the long term, it's going to be needed in order to have a more healthy and functioning CMBS market.
And are there any special legal or regulatory issues that you're keeping your eye on?
I am a big fan of the notion of Congress modernizing, I would say, the Foreign Investment and Real Property Tax Act to allow more investment by foreigners in U.S. REITs as well as in U.S. real estate. Right now, the REIT vehicle is a very positive vehicle for avoiding the Foreign Investment and Real Property Tax Act, but I hope that there be some more room there so that foreigners will be allowed to invest in REITs and not necessarily worry about whether they're domestically controlled or not. I think that that's hopefully a positive movement that I know that NAREIT's very focused on. In addition, I would say that governance has been a particularly focused area in the REIT space. I actually think that the REIT industry is ahead of the general market in terms of positive shareholder-friendly corporate governance. But in connection with some of the more recent REIT IPOs that we've seen in the last several months, we've seen a trend towards even more friendly quote-unquote, friendly shareholder governance. Now the question is, you have a great debate about whether or not that's good for the shareholders over the long term or not so good for the shareholders over the long term. But putting that great debate aside, there's certainly been a movement in the direction of having what most institutional investors would consider more shareholder-friendly provisions in the governance of public REITs. And I think you'll see more of that in connection with new issuances.
For more information on this and other REIT news and analysis, check out REIT.com.